I want to bring in Gordon Gray, Director of Fiscal Policy at the American Action Forum. And Gordon, there's lots to talk to you about in this jobs report, but first let's jump off with the average hourly earnings. What did you make of that number, and do you agree with what Ethan was just saying, just in terms of some of the notes that we got out today, that maybe this is more of a distorted figure?
Yeah, and to be perfectly honest, I work in data, in my day job. That indicator was one of the few times when just a number made me sad, because we've been waiting for this entire recovery for wages to pick up, particularly among those who are the most vulnerable and further down in the income spectrum. And then we see a number that looked historically high, and it is because that those vulnerable people are no longer working. It artificially sort of inflated the number, and so it was really, frankly, sad to see. So I completely agree with the previous guest.
Yeah, Gordon, I was going through your notes, and one thing that stuck out to me, you said that these job losses are not to be thought of in the same way as those seen during downturns in the business cycle. Now, what exactly do you mean by that? And is that because a lot of these job losses may in fact be temporary?
So first of all, it's important to recognize that this is the worst jobs report ever, but it is that bad in part because of deliberate policy choices. It is important that we allow the health mission, the public health mission, to take hold. That's the testing, the therapeutics that some other guests have talked about. And so this was a deliberate policy choice. This is necessary. And so it's not the same thing as essentially the evaporation of demand or a financial crisis. So the horrifying numbers that we saw, we should be shocked. They should shock policymakers as to the scope and scale of the challenge, but they were foreseeable insofar as we can understand that when you essentially outlaw large segments of the US economy, and necessarily so, that you're going to get these major disruptions. And so it is not the same as a recession. And so it's important to think of it a little differently. It's not just the same thing where you can all of a sudden just, okay, yeah, we're going to cut taxes, increase spending, and everything will go back to normal. There's a whole nother element to this, the public health part, which has to be part of the solution.
Yeah, Gordon, you were just saying that it should remind the policymakers about this unprecedented scale of what we're seeing, and the need for what you say is deliberate, coherent, and also constructive policy responses across the spectrum of needs. What measures do you think are needed most right now?
So first, it is important to recognize and give credit where credit is due. First, the Federal Reserve has been working at breakneck pace to kind of exceed or get right up to the very edge of their emergency authorities to pump needed assistance in the economy. And Congress stepped up with on the order of 10% of GDP in terms of fiscal intervention, and did so in a matter of weeks. That's remarkable and to be commended. Going forward, particularly as we're starting to see some of the predictable, unusual kind of party divisions show up in the public policy debate, my hope is that to some degree, this report will remind policymakers that they need to be in the business of working together to address what is a truly historic challenge.
When we talk about that, there's an interesting statistic that we saw today, and it was about half of all U.S. workers stand to earn more if they're laid off than they did at their jobs before the pandemic. So just what are your thoughts on that, and just how does this shift the labor dynamics that we're seeing?
Sure. So that's a reflection of what was a deliberate policy choice in the CARES Act to essentially add a $600 bonus to normal unemployment insurance compensation. Now, policies that make sense in March, April, May, June don't necessarily make sense further along in the recovery, particularly once there's consensus that it is safe to reopen businesses. So when it is not safe to reopen businesses, is the rationale for that policy was essentially holding workers harmless for what is an exogenous event, this horrible pandemic. It is essentially wage replacement. That was the goal. Unfortunately, the systems that we rely on to implement these policies are a little clunky. So they essentially had to do it by giving people $600. Now, it doesn't trouble me terribly that outpaces the return to labor when the labor markets aren't functioning, when essentially your employer's closed. Later down the line, we need to ensure that the incentives are aligned so that the return to work exceeds the return to unemployment.
Gordon, how optimistic are you that when we see states reopen as we have the past couple of days, I guess, Do you think that some economists out there and some market watchers are overly optimistic just about how quickly the economy will bounce back?
Yes, I do. And I'm very concerned about irrigorous calls for reopening. My own view is that precipitous or reckless reopenings that then precipitate a need to sort of clam up again would end up being far more costly than incrementally letting some of these shelter-in-place orders continue to persist. Part of that is how the financial markets would react. What we're seeing now, of course, in financial markets is, they're forward-looking. And so we have this bizarre world where we have the worst jobs report ever. And, the equity markets, financial markets appear to have taken that in stride. But that's because they're forward-looking. If we start having to basically reset the clock every time we try to reopen, that's not going to, I would imagine a severe financial reaction among other detrimental economic dynamics.
Gordon, when do you expect that we will see a meaningful recovery?
So the hope, of course, is that we will start to see positive growth in the third quarter, possibly to the fourth quarter. I think the analogy folks are using now is a kind of a square root recovery. I think that is more likely, certainly, than a V-shaped recovery. One of the things in the job report today is that of the 20.5 million workers that lost their jobs, 18 million are temporarily laid off. But if you assume all of those folks get back to work immediately, that still leaves the unemployment rate at around 9%, and that means that there's still going to be a lot of time needed to get back to where we were just a few months ago.
Yeah, certainly. All right. Well, Gordon Gray, Director of Fiscal Policy at the American Action Forum, thanks so much for joining.
Thanks so much for having me.
Well, we are